housing market is crashing.
It is crashing.
Nothing we say here is trading advice ever. Now let's get into the real estate stuff. Now you guys know that I believe that real estate will get even worse. It's going to come down a lot from here. I've been saying this for years, actually. What's important to know is that when real estate was going up still, and people were competing and overbidding and fighting for houses and having fear of missing out, that's at the point where I'm talking about it going the other way, not now when everybody else is. And in case you don't agree with me or you don't like what I'm saying, let me add Diane Swonk. She's the chief economist at KPMG, and I'm going to put some of her comments from Meet the Press.
You were sounding the alarm bell. You're fearing that the housing market is crashing.
It is crashing. And, what's really, it underscores is how it is. We've seen rapid rate hikes, not just rate hikes on mortgage rates. They've been rapid rate hikes. And that's even more destabilizing than just moving up rates.
Again, that speaks to what I tell you about. It's the speed of the change, not the destination. So interest rates could gradually rise. A stock can gradually rise. But anything when it goes really quickly, it makes it harder for example, if interest rates go up too quickly, it makes it harder for businesses to react to the differences or the increased carrying costs that they have to deal with. Or in this case, how it's going to put way more pressure on mortgages before anybody realizes it, because the rate hikes were so quick compared to anything we've seen in such a long, long time.
And I think it's something that the Fed has understated in their own views in terms of how rapidly it's taken a toll on the housing market.
That's a great point, and I think that the Federal Reserve is going to realize some of the mistakes they made after the fact, and then they're going to change wording, or they're going to act like they haven't really done anything wrong.
And what's interesting is we're seeing also some of the hottest markets in the country are now beginning to cool on prices despite still really constrained supplies.
You'll remember Peter Leeds' videos that talked about how the inventory will correct itself. It won't be from building new homes. Based on the way the economy is heading, there will be enough homes already built for the prices to begin coming down as they have now begun.
You were thinking about buying a home. I take it this is about the worst time, or is it going to get worse and you better just jump in when you can?
Well, I think it is unfortunately a bad time at the moment, and it is going to get worse.
It is a bad time to buy a house, and it will get worse. You can look at it a different way, though. If you're looking for opportunity, there's going to be tremendous values that are not values right now. So be ready for that. Be ready for it ahead of time, that when the value gets to you, you can act rather than reacting like everybody else is going to be doing.
People aren't willing to sell out of those 3% mortgages that they locked into a year ago and put their houses on the market. And so we're not seeing the downward pressure on prices that you would normally see from a surge in an excess supply of people trying to sell homes. You're seeing it from the fact that houses are just unaffordable.
And there are places where prices are already declining. Some of these high-end markets are already feeling the pressures.
It will eventually get better, but we've got to get through a very rough time before we get there.
There will be pain ahead. The pain will be worse if you don't educate yourself and prepare properly, but it will get worse, and then it will get better. She's absolutely right again.
Even though rents on the margin have been coming down, many people are paying more for rents, and it's forcing them to stay when they would like to buy a home.
Now listen very carefully to this next part. There's your opportunity coming up here. Listen to the decline and when it's going to start that she expects. And I also expect a decline coming up next year, and I also expect it to be double digits. Just her version of double digits and mine will be very different.
We've yet to see national housing prices decline. I think next year we will see them decline by a double-digit rate.
In this next part, she's talking about the wealth effect. That is going to have a big impact, probably bigger than most people, well, I know it's bigger than most people realize it will be. Most people don't even understand any of this economic stuff. They don't seek it out. They don't learn about it. They don't think about it.
Those are important wealth effects for every household out there. And so if you're not feeling as good about the value of your home, you're not going to be as willing to dip into savings, which you've already dipped into quite a bit if you're a middle income or lower household. It's all that excess saving is piled up in the very wealthy households. That doesn't keep the economy going.
You are the common denominator. It's no different than if you're worried about your health. A doctor will tell you this, another doctor tells you something different. You have to be the common denominator who makes the decisions. That also applies to this economic train wreck that is getting worse and setting up worse. And I told you it was coming for so long now. And here it is. And you guys are doing so great. We're almost done here. This next part is about how there's such a lag from when the interest rates increase till when they have an effect, which is what I've been talking about mainly for the last month and a half, I'd say.
What I meant with Steve, and he's right, it takes a while. There's a lag. We've already seen that, purchases of big ticket household durables, of furniture, appliances, everything you fill a home with, all the repairs, all the remodeling that goes on, that's begun to come off. And some of it's come off. This is a pandemic induced housing bubble that's deflating now. And I think it's important to keep that in context.
And the thing is, you don't have to take action. That's not what I'm saying. I'm saying that you need to know the best knowledge about what's going to happen next so that you can decide if it's best for you to position yourself in a way that you'll land on your feet and help the people you care about.
But as the value of homes fall, and I do think we're going to see a double-digit decline next year, that will take off of the wealth effects and reverse, and people have already tapped into their savings, and that's when you're going to see a bigger correction in consumer spending. So it's not that we're there yet, we're clearly not, but some of the hottest markets have already begun to cool. And that's just the beginning, the tip of the iceberg, as they say.
And I've got one headline here that I pulled out from CNBC that I want to read to you. Home prices cooled at a record pace in August, S&P Case-Shiller says. And it goes on to say home prices are still higher than they were a year ago, but gains are shrinking at the fastest pace on record. So a year ago, home prices were 13% lower than they are right now. If you compare August to a year ago August. So in that time, home prices increased a lot. And then now what's happening is that they're dropping at a faster rate. Little incremental drops, such as the month to month leading up to August. They dropped about 2.6% in the month. So you watch as that accelerates. This goes back to what I always explain to you guys. It's about the speed of the event, not the destination. True in life, true in the stock market. This is about the very last video I did. That's why it's so time sensitive. I was talking about how stockbrokers and advisors are so young that they haven't had enough experience yet to understand what's happening with the down market. And this was one of the comments beneath the video that I loved. From Kerry Jenkins. I was talking to my 37-year-old financial advisor and mentioned fiat currencies. He asked me if I was talking about Italian money. And there you have it. Real estate has already started softening. It's about to start coming down pretty significantly. But I think at this point, we all know that. Everybody's talking about it. Everybody knows it. Do you see the value or the difference in knowing it ahead of time compared to now? That's what I think that we're trying to provide to you guys as we help navigate you through this economic train wreck. There's a huge value. Everybody's talking about the thing in the news at the same time. There's no value in that. There's no angle. There's no opportunity. It's valuable to you to hear about it ahead of time. Just like we told you about everything coming down together with stocks, cryptos, real estate, and bonds. And this video is sponsored by and dedicated to all of the enrollees in the Peter Leeds Army. peterleeds.com/army. Every single penny you can do to help support what we're doing here is appreciated by me, by the entire team, and it's helpful. This channel, the point is to try and guide you through this financial train wreck that we're going right into now. And the more information we can dig into and give to you, present to you, the better it's going to be for you, and we like doing it too.